My face was real big just a second ago. I was like, I don't want to see my face that up close and personal.
Oh, I know. I just had like a Zoom thing before this with work, and I was like, ooh, like it seemed like my face was like really big. So I like put this thing up on like a little thing. I want to make sure it looks better, I guess.
I know you look beautiful. So
Thank you.
No worries. Here we go. Okay, Bethany, give me 1 second. I think I'm gonna wait and let everybody see if other people join. I can't really tell.
Okay. Yeah, I wasn't sure if we'd be able to tell if people were on.
I don't know either. Oh, there's somebody. There's somebody. My daughter just let my dog out. She knows it drives me nuts. Good job, kid. Run. People can see you in that nappy hair.
And I told my husband, I was like, don't come home until 4:30.
I know, that's right. That's right. I figured that they'll come back, come by. Well, I've got one kid gone and one kid's here with me, so.
Yeah, how old are they?
One is big 17 and the other one, I know, right? The other one is 12, going on 22.
Okay. Is this 17-year-old a senior in high school this year?
He is not.
Okay.
Not. I know. I'm so sad about all the seniors. We have a lot of friends that are seniors, especially sports, the spring sports.
Things.
Yeah. Mm-hmm. I know, it just breaks my heart. I couldn't imagine, not being able to graduate or not having the graduation that I was used to having. I'm sure you
know. Yeah. Little celebrations and things.
I know. And so it's just kind of, I know it's going to feel weird to all of the parents and everything. Yeah. My heart goes out to them. And
yeah, definitely.
I know. Well, Bethany, thank you so much for joining me today. I am so excited that you graciously accepted my invite, because I know for me personally, I've had a lot of questions on rates and everything else, so I'm sure other people do as well. So I am going to kind of give this over to you and give you a chance just to kind of introduce yourself and talk a little bit about some of the things I gave for those people who are joining. I do see there are more people who are joining. Oh yeah.
We're popular.
We are.
Hi, everyone.
Yeah. I thought it would admit everybody. I don't know. This is new to people who are out there. This is new to me. So I am. Here we go. Okay. Now they all should be able to join whenever they want to.
Woohoo.
Yes. Yay.
Hello.
So I am just going to let you, I gave, for those people who are joining, I gave Bethany kind of some questions that were most popular and most important. I think people have asked me a lot, and kind of surveyed some people, and those were the 4 most popular questions. So I'm going to turn it over to you. If you don't mind.
Sounds good. Well, I'll introduce myself a little bit. My name is Bethany Ollis. I'm with Atlantic Bay Mortgage Group. Been doing mortgages since October of 2018, so about a year and a half now. Really like it. I had been in banking previously since about, seems like a long time ago, 2011. So I've been in banking and lending for quite a while now. I really enjoy it. I live in Tryon in North Carolina, so it's like 45 minutes from Greenville or so. So, Atlantic Bay has been in Greenville for 5 years. And one of the questions that you had asked was the loan programs that we offer. So we pretty much offer all loan types except for land only and home equity lines of credit. For those those types of loans, I would just refer people to their local bank or credit union. They usually have really good options there. So as far as what we offer, of course, we offer a conventional loan. And I'll just preface this by saying all of these letters for like the government loans might be a little confusing. Just know that you're not expected to know what they mean or anything. The mortgage, you're not the professional. The mortgage professional, when they take your application, will kind of help guide you through it and decide, what program might be best for you. So in addition to the conventional loans that we offer, we do also offer the government loans. So FHA, and there's VA. So VA, you have to be a veteran to qualify, but there's no down payment required. Rates are usually a little bit lower, and there's no mortgage insurance, which is a really big plus. But of course, you have to qualify for it and have been a veteran. Then there's USDA, which there's no down payment required for that. But it's more rural areas. So if you're okay with being in a rural area, then that might be a good program for you. Another loan type that we offer is a construction loan. So if you just want to build your dream home on some land that you already own, then, you know, we can take a look at that, as well as a renovation loan. So if you find a home that's just not quite what you want, say it's in a great area, maybe has some foundation issues, something like that, or even just cosmetic issues, you can roll those costs to improve the home into the loan, which is really cool. I will say for right now, during the coronavirus, there are a little bit less of the construction and renovation programs available just due to the risk. And it's not always going to be that way, but just for right now, there's a little bit less available to us. And then something else that we offer that I wanted to mention, we do have access to state down payment assistance programs. This is actually not for right now during the coronavirus pandemic, but states will usually offer down payment assistance to borrowers who qualify. So they'll usually offer like $6,000 or $8,000 to go toward down payment and closing costs. So it's a really good program for people that qualify. There are income limits, things like that. And you do have to live in the home a certain amount of time, either 10 or 20 years. And then at that point, that down payment assistance is forgiven. So that's just kind of a brief overview on some of the programs most popular that we offer. And then let's see, another question you had was, do we have anything specifically for first-time home buyers? So we don't necessarily have a first-time home buyer loan that's called that. Typically for first-time home buyers, if they come to me, we kind of look at what their credit score is, and we have a couple options from there. So if their credit score is over, say like a 700 is typically where we would go with conventional. There are two programs, one through Freddie Mac and one through Fannie Mae, that offer 3% down payment. So it's a lower down payment. It has lower mortgage insurance, and then the rates are also really good. They're a lot lower than a regular conventional loan. Not everyone is going to qualify for them, but for those that do, it's a really good program. And then if your credit score is, say, under a 700, we typically look at FHA. So FHA, we do that because FHA is better for people with lower credit scores. The mortgage insurance is based on the loan amount rather than your credit score. So those are kind of the two things that we look at for first-time home buyers, if that makes sense. I feel like I'm rambling. I don't know, want to throw anything in there?
You are not rambling. You are not rambling. So credit is important for first-time home buyers. Do you see a lot of first-time home buyers who, like, for example, we get some first-time home buyers who have not started credit. Mm-hmm. What are a couple of ways that they could build credit? Like in your professional, which you've seen professionally, like secured. I used to be in banking also. I was actually a bank manager for several years. So we really push secured cards as a way to build credit, but I never saw that. I saw it from a banking standpoint, but not a lending or credit standpoint. You know, we were taught, hey, this builds your credit. So what kinds of things could first-time home buyers do to build their credit?
So I would say for someone who's just starting out and does not have any credit, they don't necessarily have bad credit, but they just don't have a lot, I would say go ahead and try to get a small credit card, you know, whether it's secured or not, and just go put a tank of gas on it each month and pay the statement balance off. That way you're going to be building your credit and it's reporting that you're making a payment each month, but you're not going to be paying any interest. You know, if you have a rolling balance, and of course, you know, there's always, you know, maybe an emergency situation where you do have to put something on a credit card and not pay it off immediately. But if you can just put a tank of gas or go to lunch, you know, and put something on your credit card and pay it off each month, that really helps. And like you were saying, the secured credit cards are really good for people that, say, have like some derogatory credit history and can't really get approved for another type of credit card. And I used to work at a credit union that had a really good product. It was a secured loan. So rather than a secured credit card, it was a secured like installment loan. So they would only do them for 1 year, a 1 year period. And this is not something that you would want to pay off early. People used to ask that because the whole point of it is that it's reporting that you've made a payment on time each month for, you know, as long as possible. So I know that they would do them for like $500 or $1,000. The interest rates were really low. And it just kind of shows up as a payment that you've been making. because there are, different kinds of credit. There's revolving credit, which is like your credit card. And there's also installment loans, like personal loans from a bank or a credit union. An auto loan is considered an installment loan. So you kind of want to have multiple kinds of credit. You want revolving and installment. So those are a couple things that people can be doing to build credit, whether they are starting out with nothing or if they're trying to rebuild from having maybe like a derogatory thing happen to them.
Okay. Thank you.
Definitely. Let's see. You had also asked about when people are applying for a mortgage, what things are important. Is it like credit, income, debt?
Yes.
So I can't say that any of those are more important than the other. They're all, very important.
Bethany, God.
I know.
I can't buy my brand new car I wanted.
I know, not until after the mortgage closes. So typically when we take an application, we're going to get kind of into the nitty gritty with you. We're going to get to know you pretty well. We'll, take a full history of or at least your last 2 years of employment, address history. We want to know where you've lived for the last 2 years, where you've worked for the last 2 years. Employment's important. Like, are you going to have a stable history? Have you jumped around from job to job? Just been there a couple months. We want to make sure that you're going to have a steady job history and you're going to be able to make this mortgage payment, of course. We also take a look at your bank account. We want to see how much you have saved. Do you have a pattern of savings, or is it just your tax return that was deposited last month? These are all things that are taken into consideration when we're looking at doing a loan application. And then as far as, of course, credit, we're going to look at your credit history, your credit score. Each loan program will typically have a minimum credit score that they say, you have to have at least this.
Right.
So scores are very important, as well as your credit history. Have you made, do you have any late payments on credit cards, auto loans, things like that. And then one of the bigger things that we look at is called debt to income ratio.
Right.
So again, various programs will have their, like USDA, they want like their max is 41%, whereas FHA might be able to go a little higher. Each one is going to have their requirement. But what it is we take a look at your monthly debts that are on your credit report in relation to the monthly income that you have coming in, and it's called the debt to income ratio. It has to be below a certain percentage, and that's just because we want to make sure that you can make your payment. We want to make sure that you can afford it, and you're not going to be stretching yourself because you just love this home and have to have it. We want to make sure that you have the income to support that, and also be able to still go out to eat and buy gas and pay for your insurance and all of those things.
Because we're all going to go out to eat when everything is back to normal. I believe that every Mexican restaurant is going to have lines out of the door if Facebook has anything to do with it.
I agree. My husband was like, as soon as this is over, we're going to Sierra Nevada. And I was like, yes.
Yes, exactly. You had mentioned something, Bethany, that I wanted to ask about, and that was employment history. I know that some people may be right out of college and have only worked at a job for maybe 6 months to a year. Is there options for people like that, or do they really need to stay on the job for 2 years before they start really thinking about buying a home?
So it just kind of depends. Let me see. I might have to get my charger in just a second. So as far as employment history, we want to see a full 2-year history. Now, if someone had maybe a work study job in college or worked throughout college, that can kind of count. I would say if somebody just didn't work throughout college and they've just started a job, we would need to wait until they had been there for at least 2 years.
Gotcha.
But yeah, so employment history is important, and some programs have different employment history links and things like that they want people to have been on the job for a certain amount of time.
Yay.
Yeah.
Very good. Some good information you are sharing with us.
Yes, let me run and grab my computer charger and I'll be right back. I'm sorry.
Sure. Oh, I see some people. So I hope that you guys who have joined have been able to hear what Bethany has talked about. The good news is that we are also recording this. So hopefully we will have a playback available for people, and we can share that on platforms such as YouTube and Facebook and things like that, if I can learn how to do it. Oh, she's back.
I'm back. Not very long. Yeah.
And chargers are important. I did mine on my desktop instead of my phone because, number one, I didn't really know how to work it from my itty bitty screen of my phone. My computer's a little bigger.
And I feel like people are getting a lot better at Zoom during this quarantine situation than they have been in the past.
I agree. This is the first time I've done it, so a minute ago I was like, my sister-in-law is on the chat too. She's here, thank goodness, because she's telling me, I see your desktop, smile. She's giving me pointers over here because I've never done this before.
That's what you need, yeah.
Stacy, for keeping me in line. So that's
Definitely.
great.
And then let's see. So I know the last question you had was about rates and the volatility that we've seen. So rates, I will say for right now, seem to have kind of evened back out. About, I want to say like the first or second week in March, it was all in the news where rates had dropped and everybody was refinancing and rates were really, really low. Well, then they jumped back up and they kind of just started, it's like up and down. So it's like somebody would call and you would quote them this rate as of, right then. And then it was like an hour later, they could have jumped quite a bit higher. Whereas you quote one person, a 4%, and then it goes over 5% the next day. That was kind of a stressful time, of course, because if someone's debt to income is really tight, the rate can make a difference, if it ups the payment a little bit and there's not a whole lot of wiggle room. That was kind of stressful during that time. And especially if you tell somebody one rate, they've got it in their mind. And then when it comes back and it's like a whole lot more and they don't like that. Luckily for right now, it seems that things have evened out a little bit and they're on the lower side. So they're typically, like when I've been taking applications for FHA, VA, and conventional, I haven't done a USDA recently, but they've all been under 4%, like between 3.5 and 3.875. So those are still really good rates. This time last year, they were in the high 4s for people with excellent credit. So they're still really good. I think people are still thinking they're in the low 3s where they might be for someone. It depends on lots of things. When someone applies, the loan to value ratio, how much you're putting down, your debt to income ratio, the loan amount, all those things get taken into consideration when the rate pops up and this is what you qualify for. But for right now, things have seemed to even out, still low, and the rate experts that we follow seem to think that they're going to stay lower for at least the next year. I wouldn't quote me on that, but that's what people are saying, which is kind of comforting to know that they're expected to stay low and not just like jump up and down, because that was not fun.
No, and for those who may not know, I reached out to Bethany a few weeks ago because we had a situation in the real estate market. Of course, once we get a contract, we send it to a lender such as yourself, Bethany, and that's when you guys get started with rate locks and things like that. And in the midst of that was when the pandemic happened, and rates, they had not locked the rate yet, and the rate just kind of just went up. In this one day, the rate had gone up, and we ended up losing, the contract. And so that was the reason why I wanted to talk to you specifically, is because there's been a lot of people who have wondered, are rates volatile or are they starting to even out? So it's good to hear from you, an expert who sees this on a daily basis, that, what, we did have a touch and go moment there, but things are starting to level out a little bit. So that makes me feel a lot better.
Does, and one thing I would like to say about rates for right now, and this is mostly for government loans, we're going to talk about the FHA, USDA, and VA. Typically when we quote a rate for someone, it's called a par rate. It means that they don't have to pay anything to get this rate in discount points, and they're not getting any lender credit. It's just what they qualify for. Recently, what we've seen with FHA mostly is that there is no par rate, and people are having to pay a little bit more. Like they're going to have to pay to get their rate.
Right.
Whereas previously, in just a couple months ago, they didn't have to. So they might have to pay like $2,000 or $3,000 to get any rate. But one thing that can be done on the realtor side is maybe just asking for a little bit extra in closing costs, or just asking for closing costs in general to kind of help cover that.
Right.
So that's one thing that I do want people to be aware of. And all lenders are seeing it across the board because it's something that Ginnie Mae has done. It's like the investor for those government loans. It's on their side and it's trickling down to us.
Absolutely. Of course. We love the trickle down effect.
I know, right?
It happens. And I'm glad that you bring that up too, because a lot of times people don't understand what closing costs consist of. Our state contract, South Carolina state contract, does do a great job of spelling out those transaction costs and what they can mean. But it's good to know from that standpoint, if sellers are listening, is that is part of the reason why buyers sometimes have to ask for closing cost is the ability to put their cost a little bit lower to be able to purchase the home for the price that you've agreed to. So that is nice. I didn't know that. So you just taught me something. You've taught me a lot today. Thank you.
Good. Yeah, that was what I was hoping. But yeah, that's something that we've seen. And like I said, I always tell people somebody's got to pay for the closing costs, and you can ask for them. Of course, the seller has to agree to it because it's less than getting from the sale of their home. But they just have to agree to it.
Absolutely. Or the buyer has to know the cost, of doing the loan, and it may be a little bit more than they had anticipated, which goes back to what you said about planning and preparing. If you're thinking about buying a home, getting yourself prepared is really important. One other question that I just kind of thought of is how early should people really start talking to a loan officer? I think that in my business, I see people start to talk to a loan officer as soon as they've made up their mind, I want to buy a house. But do you think that it is something that they should talk to maybe a few months prior to? Like when is it best to prepare?
So I guess for everybody, it's a little different. Some people, they decide I want to buy a house, and it just so happens that they have plenty of money saved up for a down payment and they have excellent credit history. Right. It really depends. Like there are some first-time home buyers that I talk to, and they've been living at home and saving up all this money, and they're just prepared. There are others that they just decide they want to buy a house, and everybody wants to buy a house. It's like the American dream. But sometimes people aren't quite ready, and it might take a few months for them to get to that point. Like I said, we do want to see a pattern of savings that and sometimes the underwriter might, based on credit score, they might require reserves in your checking account. So that would be like, say your payment was $1,000 and they wanted 2 months of reserves. They want to see $2,000 that's in your account after closing costs, down payment, and everything. And that would just be like in the event that something terrible happened and maybe you lost your job or something, you would at least have a couple months reserve payment that you could, ideally put towards your mortgage payment. But yeah, so it just depends. I would say it's best to, when you start thinking about it, maybe just kind of get a little checkup. One thing that Atlantic Bay can do that I don't know that others can do, other lenders, we can actually do a soft pull on people's credit. So when someone applies for a mortgage, there's 3 credit bureaus, and we pull all 3 scores, and we look at your middle score, and that's the score that we're going to go off of, like rate and mortgage insurance rates and everything. When we do a soft pull, we pull 2 of your scores, so we can see your debts and your scores, and it doesn't count as a hard inquiry on your credit, and it's just kind of like a little glimpse into your situation. And if people do that, we can look at their income, and I can kind of calculate their debt to income and say, well, you might need to pay this off before you're ready, or you just need to save up some money. And some people, they might qualify, except for they just don't have enough money saved up, so they might need 4 to 6 months to just kind of hunker down, not go out to eat, and just save up as much as they can to get ready for that. Because a lot of people don't know about closing costs, but they are a requirement. So some of the things that are a part of closing costs are, so typically lenders will have an origination fee, whether it's a flat fee or a percentage of the loan. You're going to have to pay for an appraisal because we want to know that we are lending the amount that the house is worth, not more. An attorney is going to have to close the loan or the transaction. So there's going to be an attorney fee. Your whole first year of homeowners insurance premium is included in closing cost. Just things like that. So they're typically, I would say, depending on the amount of the home, between $4,000 and $6,000. And for your pricier homes, they can even go higher depending on how much taxes and insurance are for those homes. But that is something to take into consideration too. But yeah, as far as people being prepared, the sooner the better really, but you know, a lot of times that doesn't necessarily happen and people kind of have to wait. You know, they contact wanting to buy a home right now and you know, they have to wait a little bit, but you know, everybody has to start somewhere.
That's right. That's right. I was one of those that was like, oh, let's buy a house today. You know, it didn't have
A long time ago, like 10 years ago, I thought I was like, oh, I'm going to do this. And then you're just not quite ready.
Yeah, no, I was not quite ready. I had to get some help.
Yeah.
But, you know, made it eventually. And one other thing that just kind of popped into my head, there are credit platforms out there, and I'm trying. It just slipped my mind. One of the most popular is Credit Karma. You know, people will use Credit Karma to kind of check their scores and stuff. Have you seen that is fairly accurate? Or
no.
Oh, I'm glad. That's like the
so I think
like
that
the Zillow of real estate, isn't it?
It
Credit
is.
Karma and Zillow, I think, are sisters.
That's what I like to say. So I always tell people that Credit Karma is a good way to track what's on your credit report. So it's a good way. So like say something is, you know, you're like, what is this? I don't have a credit card with Capital One. It might be a fraud situation, or say some, you know, like your bank or credit union said that your car payment was late, but you know, it's not. It's a good way to track things. But as far as the score, I know that it's not, they use their own algorithms to calculate what they think scores should be. Whereas we're pulling it directly from the credit bureaus. I'll just, from personal experience, the last time we moved, you know how you want to buy like new rugs and like all the things that you buy. I racked up like, you know, a little bit on a credit card, and Credit Karma dropped my score. This is like 3 years ago now, but it dropped my score like 60 points. And I was like, what? And it was not that you know, it would normally, that would be if you had a late payment, but it takes balances into consideration a lot more than it should. I've noticed, and as I paid that card off, it bounced right back on Credit Karma at least. And sometimes people's banks, they a lot of times don't know about it, but their bank might have on their mobile app a way to track credit, or like you might have a credit card. I know one of my Capital One cards does it too. Those are good ways of tracking better than Credit Karma, but I still think people should use Credit Karma because I think it's encouraging when you see the score going up, and you know, it's something that you want to work toward, but I can't say that the scores are super accurate.
Well, that is, to your point, it is good to know. I've got a Capital One card myself, and it has Credit Wise. It's what that you can have, and so I have that, and I use that, you know, as a way to track my own, you know, score. And you're right, when I see it go up, I give myself that little
you're like, yeah,
you know, you're awesome, you know. So good. Well, Bethany, I have got a prize coming your way, a little treat for taking time on a busy, beautiful Friday afternoon to spend with all of us. I know it is so pretty outside. I'm sitting here staring. You can see the face right
inside.
I know it's great, but I do appreciate you being here with me and having this question and answer session. I hope that we can do it again. Better yet, hopefully soon we'll actually get to meet in person at an open house and talk with people. But I truly appreciate you taking time out to do this with me today.
Of course. Well, thank you for having me. And if anybody has any questions about anything specific that I talked about, feel free to contact me.
Yes, I will do it, Bethany. So thank you so much for joining, guys. That is it for our question and answer session with Bethany. Hopefully this is something that we will continue to do. Even past the COVID-19. I think this was really fun. I personally like this whole Zoom thing.
Yeah, I like it too.
I do. And as you know, life progresses, I'm sure that you guys will have more questions, and it'll be great to partner up with Bethany again. So we're going to end here. We wish you all a wonderful weekend, a safe weekend, and we will talk to you soon. Bye, Bethany.
Thank you. Bye-bye.
Bye.